Let's step back in time to witness the amazing story of the world's oldest stock exchange. It's one of the most important financial creations ever, as it revolutionized the world of finance. Firstly, we'll dive into the background of the stock exchange, and in the second part, we'll look at the incredible impact the Dutch East India Company had on the exchange. Before we begin, I'll briefly explain a few major reasons why stock exchanges are so important to the economy today. First, they organize and regulate trades, which help secure transactions and prevent fraud. Also, stock exchanges help raise capital by offering shares and give investors a wide variety of financial instruments such as bonds, commodities, shares, etc. There are other benefits stock exchanges bring to the economy, however, we'll save that for another video. The world's oldest operating stock exchange is now known as Euronext Amsterdam and was previously called the Amsterdam Stock Exchange. It was created in 1611 to support the Dutch East India Company, which was the first company to go public and issue shares in 1602 while taking on voyages to Asia. Initially, the exchange was only used to trade the company's securities while rallying public support for these high-stake ventures to Asia. The world's first exchange building was designed by Hendrik de Keyser and was primarily built for commodity trading. However, unlike a modern stock exchange, merchants would deal in beer, wood, salt, grains, and other goods. Part of the building was for commodity trading, and another section was for Dutch East India, or VOC, which was the company's trading name. The exchange brought rapid liquidity growth to the marketplace. Additionally, the position of the exchange allowed investors the convenience of walking a short distance to register the transaction in the East India House and finish the money transfer in the exchange bank, which was also in Dam Square. But how did it start? Let's find out. Prior to the Hendrik de Keyser exchange, traders would gather around the Warmoestraat, as it was a location where most of the merchants lived so they could easily meet. However, as commodity trading grew, these local meetups started to cause congestion, which meant a new trade location had to be made. This led to Nieuwe Brug, or New Bridge over Damrak, becoming Amsterdam's main trade location in 1561. But there was a major problem. The major downside to doing business on a bridge was poor weather conditions. The cold and rainy weather would mean traders would have to rush to cover when trying to make deals. As a result, in 1586, during periods of bad weather, business moved inside St. Olaf's Chapel near the bridge. Even as the Dutch East India Company was established, merchants still met on New Bridge and occasionally Olaf's Chapel. The bridge and chapel became the best places to find buyers or sellers, making them the world's first informal stock exchanges. Then came the Amsterdam Bourse, which was an open-air building for commodity trading. As soon as the 16th century, citizens of Amsterdam speculated on grain, herring, spices, and tulips. However, a proper exchange building would provide greater efficiency and volume while allowing more complex transactions to occur. By 1607, the city finally recognized the need for an exchange building. When the Hendrik de Keyser exchange opened in 1611, the city passed a bylaw setting its official hours from 11 a.m. to noon every day except Sunday. The goal was to centralize trading in one location, boosting transaction volume and benefiting the local economy. Despite the city's attempts to regulate trading hours and locations, many traders ignored the rules. By the late 1600s, many started their day early in Jodenbraestraat. After the exchange closed, traders moved to gather in Dam Square, then later in the evenings they mostly met in cafes in Kalverstraat to continue doing business. Over time, the Amsterdam Bourse suffered from severe subsidence due to its ambitious location over a waterway of the Amstel River, which allowed small boats to pass underneath. Eventually, in the 19th century, the city council demolished it after continuous maintenance problems. While the Amsterdam Stock Exchange was the initial place to have volume, fluidity, and a significant public awareness, it was not the first place where people exchanged financial products. We've seen earlier examples of exchanges, however they lacked significant volume or freedom to transact in stocks like the Amsterdam Exchange. Therefore, the Amsterdam Stock Exchange was the first of what would be recognized today as a stock market. Later, in 1845, Jan David Zocher helped build a new exchange designed like a Greek temple with columns by the entrance. Then in 1914, the exchange moved to another building in Burgsplein 5 by the old building where it still exists today. For centuries, the Dutch were under the control of the Austrian Habsburg until power shifted in 1567 to the Spanish Empire. Then in 1581, the Dutch fought the Spanish, which finally led them gaining full independence. At the time, the economy in the Netherlands relied heavily on sea merchants, who resold Asian and African spices acquired from Portuguese traders. However, when Spain took over Portugal, that supply chain was cut off, forcing Dutch merchants to directly explore eastern trade routes. As they began exploring trade routes where spices grew, they soon realized how risky the voyages were. 10% of ships were destroyed at sea, and most that returned from the voyage would lose 2/3 of their crew. Despite this, the Dutch succeeded in discovering new routes and profiting while setting up trade bases. But they had a huge problem. Despite profiting, they had to find a new way to keep funding in their fight against Spain. So in 1602, merchants united to form the Dutch East India Company. But this wasn't just any company. It was the first publicly traded company and had incredible power. The VOC had full control over waging war, occupied vast territory, and established trade monopolies. Essentially, the VOC had complete control over trade, politics, and war endeavors in Asia. The company could build forts, keep a standing army, and negotiate freely with Asian countries. It's fair to say the company had incredible power. To finance the venture, the Amsterdam Exchange was established, allowing the public to purchase shares in the company for part of the profit. The idea caught on quickly and raised over 6 million guilders, worth about $110 million today. However, despite being the first company to trade shares, the idea of investing already existed. A common investment prior to the VOC IPO was in single trade expeditions, mainly across Europe. Merchants would add their money together to fund these expeditions, and if there was a profit, it would be shared amongst them. But the VOC was the first on two major parts. Firstly, to allow anyone to trade without a minimum amount. And the second key part was that the shares were transferable through an exchange. Hey, if you're enjoying watching the video, please feel free to click the like button and subscribe, because it really helps. Thanks. The Dutch East India Company had little to do with establishing or regulating the stock exchange. However, the company made shares easy to transfer. Following an IPO in 1602, the company outlined how shares could be transferred, but it didn't build the exchange or create rules for share trading. The real developers of the stock market were the shareholders and merchants who actively traded in various types of transactions. Shockingly, as early as 1680, traders were already using forwards, options, and futures, which were as complicated as they are today. Surprisingly, the shareholders of the Dutch East India Company were not only wealthy individuals. For example, one shareholder named Nielton Cornelius was a maid and invested 100 guilders out of a total of 3.67 million guilders. The total of 3.67 million guilders is approximately 100 million euros today. A high sum considering she made only 50 cents in a full working day. But this was not unusual. Normal households were allowed to invest in VOC, and many did. Just as things were going so well for the VOC, many shareholders began to get disappointed as the company had never paid dividends for almost 10 years. But this was just the start. Soon, in 1608, a former director stated what was thought of the first ever bear raid. He went by the name of Isaac Lemaire. He gathered with his colleagues to use forward contracts so he could sell VOC shares. The forwarded contracts work similarly to futures by letting investors make a deal in advance. However, unlike modern-day futures, no collateral or deposit of funds was required. Simply a written contract was enough. The shares crashed, and investors became furious. To help shareholders, the VOC board of directors had to think fast. They decided to pay a dividend every 2 years from 1623. The dividends were not paid in currency, however, they were paid in cloves, which was a highly valuable spice at the time. Dividends were paid primarily in cash and sometimes bonds, however, this only happened from 1646. The introduction of dividends helped steady the share price, and eventually prices began to rise. Isaac Lemaire was the largest shareholder in VOC during its early years with 85,000 guilders in shares. However, he soon ran into problems with other major shareholders in the company as he was accused of not releasing receipts for his part of the voyage cost in 1602. He was sued but managed to negotiate a deal for the price of 1,200 guilders. Lemaire was soon told to leave the VOC in 1605 and, soon after, used his knowledge to begin exploring ways to compete against the company. He even tried to crash the share price by creating a company with 8 others to sell around a quarter of the shares. The shares were sold short, through a naked short without actually owning them. As a result, the share price crashed in 1609 and the blame was largely put on Lemaire. To help prevent this from occurring again, the State General of the Netherlands decided to stop the sale of shares that a shareholder didn't own. Later in 1610, the share price of VOC rose, and the company of Lemaire took significant losses as the share had to be sold at a lower price than the market price. Lemaire soon fled Amsterdam. A major turning point for the Amsterdam Exchange was in 1623 after a 21-year liquidation period for the VOC ended. The initial 21-year liquidation was to help distribute profits to shareholders. But the VOC was not expected to slow its growth in Asia. Therefore, the Estates General of the Netherlands gave the company a second charter in the West Indies, which helped enable the business to continue. However, this second charter gave no liquidation plan, which meant money invested would stay invested, leading to many shareholders selling their shares. As a result, turnover in the exchange increased and the stock exchange became more important. The West Indies voyages were more dangerous than the ones to Asia, with threats of pirates and extreme weather conditions. Shipwrecks contributed to making it far more expensive. Despite many trips failing, the ones that made the journey made good profit and helped develop trade in the region. Soon after the Amsterdam Stock Exchange issued the shares, stock merchants became directors of the VOC. As the Dutch East India Company continued to grow, they established bases across India and parts of Southeast Asia, such as Indonesia. Soon they even overtook Portuguese strongholds in these regions. The company's incredible success led to the creation of trading clubs, where investors could network and share insights. Traders in these clubs gained an advantage on anyone else, as they had better opportunities to find information about the company. The club traders' network made transactions quicker, and the market became increasingly efficient. These clubs helped develop the stock exchange and increased the need for brokers who helped process transactions between buyers and sellers. Brokers received a small commission to ensure the paperwork was correctly completed and filed while finding a buyer or seller. Through the 17th century, traders frequently used brokers to find out more on a potential buyer or seller. Shareholders of the Dutch East India Company were allowed to resell their shares, which soon formed secondary markets in Batavia in Indonesia, which formed the base of their operations. Soon after, the company became the first global corporation. The profit margin on spices and silk was astonishing, often hitting as much as 1,500%. By 1609, the Bank of Amsterdam helped support this growing financial system and helped place Amsterdam as the world's financial capital. Then in 1621, we saw the VOC being developed, mirroring the East India Company's model and expanding trade in regions including South America and the Caribbean. 1648. After decades of conflict, the Dutch had officially beat the Spanish while gaining recognition as an independent nation. With newfound wealth, they turned to ambitious land reclamation projects, and in the 17th century, many began shifting from working as merchants to bankers. However, just as things were going so well, the Dutch were hit with a huge setback. The 18th century was marked by conflict with England and France. It became increasingly expensive for the Netherlands to continue as the British and French began to take over. This led to the fall of the Dutch Republic and VOC in 1795. As the French, led by Napoleon Bonaparte, who took over, the Dutch East India Company was finished in 1799. Consequently, the Amsterdam Stock Exchange saw a steep decline, only beginning to recover in the mid-1800s once the Dutch regained independence from French rule. Through the 19th century, the Amsterdam Stock Exchange was central in revitalizing the economy. In 2000, it joined forces with stock exchanges in Belgium and France while rebranding as Euronext. Today it stands as a symbol of the Netherlands' remarkable financial history, as it laid a solid foundation for the Dutch economy over the centuries. Hey, if you enjoyed the video, feel free to click that like button because it helps. I make videos explaining stock market stories, so make sure you subscribe so you don't miss out, and check out these fascinating stories here. Thanks.